You see stock market news everywhere. S&P hits record high, Fed raises rates, tech stocks crash. But what does it all actually mean? And more importantly, how does it affect your money?
By the end of this video, you'll understand the 5 most common stock market terms you'll see in the news. You'll know exactly what they mean, and you'll never feel confused reading financial headlines again.
We're breaking down bull markets, bear markets, market cap, PE ratio, and dividends. The third one will surprise you. Most beginners get it completely wrong. Let's dive in. Stock market news is simply information about what's happening in the financial world. It tells you which companies are growing, which are struggling, and what economic factors are affecting prices. But here's the problem. Most news is written for experts, not beginners. Term number 1, bull market. A bull market is when stock prices are rising or expected to rise. Think of a bull attacking upward with its horns. Simple rule, bull equals up. When you hear we're in a bull market, it means investors are optimistic and prices are climbing. Term number 2, bear market. Opposite of a bull. A bear market is when stock prices are falling, typically 20% or more from recent highs. Think of a bear swiping downward with its paws. Bear equals down. When you hear bear market ahead, investors are pessimistic and prices are dropping. Term number 3, market cap, short for market capitalization. This is the total value of a company's stock. Formula: stock price times total number of shares. Example: if a company has 1 million shares at $50 each, its market cap is $50 million. This tells you how big a company is, not how much money it makes. Term number 4, PE ratio, price to earnings ratio. This tells you how expensive a stock is compared to how much money the company makes. Formula: stock price divided by earnings per share. Example: if a stock costs $100 and the company makes $5 per share, the PE is 20. Lower PE equals potentially better value. Higher PE equals investors expect big growth. Quick pause. If you're still watching, you're already ahead of 90% of beginners. Because the last term, dividends, is how rich people get richer without working. This is critical. Term number 5, dividends. This is when a company shares its profits with you, the shareholder. Example: you own 100 shares of a company that pays $1 dividend per share. You get $100 just for owning the stock. Some companies pay dividends every 3 months. This is passive income, money while you sleep. Now let's apply this. Headline: Fed raises rates by 0.25%. Translation: the Federal Reserve increased interest rates. What it means: borrowing money becomes more expensive. Stock market impact: usually negative. Companies pay more to borrow, so profits drop. See? Not scary anymore. 3 beginner-friendly news sources. Number 1, Investopedia. They explain terms in simple English. Number 2, Yahoo Finance. Free stock data and news. Number 3, Google Finance. Quick price checks and market summaries. Avoid complex sites like Bloomberg until you're more advanced. 3 red flags to avoid. Number 1, this stock will 10x tomorrow. That's hype, not news. Number 2, experts say buy now. Who are these experts? Number 3, no sources or data, just opinions. Real news has numbers, sources, and facts. If it sounds too good to be true, it probably is. Here's your action plan. Step 1, pick one stock you're interested in. Step 2, read its news on Yahoo Finance daily for a week. Step 3, write down any terms you don't understand. Step 4, look them up on Investopedia. Step 5, repeat. In 30 days, you'll understand 80% of stock market news. 3 mistakes beginners make. Number 1,
panic selling when they see red headlines. Number 2, buying based on one news article without research. Number 3, thinking news equals instant profits. News is information, not a crystal ball. Use it to learn, not to gamble.
Real example. Headline: Apple iPhone sales beat expectations. Translation: Apple sold more phones than analysts predicted. Market impact: stock price likely goes up. Why? More sales, more profits, happier investors. See how simple it is when you break it down. Here's a secret. Sometimes you should ignore the news. Daily market fluctuations are noise. If you're a long-term investor, don't panic every time you see "market crashes" headline. Focus on company fundamentals, not daily headlines. News is a tool, not a boss. Free resources to level up. Investopedia's Stock Market Basics course, completely free. Khan Academy's Finance section, great for visual learners. YouTube channels like The Plain Bagel, simple explanations. You don't need to pay for courses. Everything is available for free. If this helped you, hit subscribe. Next week, I'm breaking down how to read a stock chart in 10 minutes. Candlesticks, support, resistance, all of it. You won't want to miss it. Drop a comment below. What's the one stock market term you still don't understand? I'll answer every single one.